We're rolling. Okay, so welcome everyone to another episode of the ICO show. Today I have with me a very interesting guest, Yonatan, from a few different places, from Israel. I found Yonatan when I was browsing through Alphabet's website actually, and then I got looking into his details a bit closer. So he had this new project called Matchpool, so that got me really interested, and I did more research on that. So I wanted to bring Yonatan on the show really to discuss from the ICO perspective, because I think that's one of the fastest growing spaces right now in cryptos. And obviously, Yonatan must have a lot of experience, so I want to get him on, get his views on that, and obviously, find out a bit more about Matchpool as well. So so welcome to the show, Yonatan.
Thank you for having me here.
You're welcome. So before we jump into your projects, maybe tell us a bit about you. Your background, how you got into cryptos, what was your sort of aha moment in the space?
Okay, I'm 26. When I was 21, I used to work at a hedge fund. I started as a long-short equity hedge fund, stocks, and bonds. I started as an analyst, and then I got in as a small partner at this hedge fund. And in 2013, January, I just read a paper, and suddenly I saw a small ad about Bitcoin. So what I saw there is that it's an asset that doesn't belong to any body. Like, for example, stocks belong to the stock exchange. Stock exchange issue the stocks, and every asset in the world now have someone that issued this asset. So when I saw Bitcoin, I was really thrilled because it was unusual asset that no one issued, and it's decentralized. So I started getting to it more and more, and I tried to buy, and then I couldn't because Mt. Gox at the time didn't approve me as the KYC. So suddenly I saw a Google ad, buy Bitcoin with the shekels, which is the Israeli currency. So I pressed on that, and then I emailed this guy, and he told me, just send me shekels and I will send you Bitcoin. I told them, wait, but who are you? So he told me, okay, just send me if you want, send me the money. If you don't want, don't send me. Okay, I thought to myself, if he was a crook, he wasn't that straight. So I sent him. At that time, it was about $2,000 for 200 Bitcoins or something like that. And I sent them the money, and I used to work at the hedge fund, and I keep working, and then I showed my boss and the old associate in the fund that this asset is much better and much more interesting than most of what they are used to. And so I didn't took this very seriously back then. I took it seriously, but I didn't transfer all my life into it. Only in 2014 there was the Ethereum crowd sale. So I told about it to some of the funds investors and the other of my friends. I took some money. I put for them in Ethereum first crowd sale, and after a year or after a few months, they got like 3 times of their investment. It was 90 cents for an Ether. So they was very happy, and they told me to sell it. So I sold it. We had like about 150,000 Ethereum, and we sold it in 70 cents or 80 cents. But back then it was good because it was 3 times on the investment, and I took 20% of it. So I was also happy. And then I participated in another 20 or 25 ICOs of the big things, like now it's big. Back then it wasn't big, like Ogo or like Waves, like others, and everything. Like I made 3 times or 2 times I sold and gave them back the money, blah blah blah. And then in 2016, I decided I want to do something for my own, to create a value other than just invest in stuff. I kept going in being part of the fund, but I also started the Matchpool, and I looked at the internet and I couldn't find a place where one could. Back then, it's supposed to be a user-generated dating network where, like before eBay, anyone that wants to open a e-store, it was very hard. So eBay enables anyone to open an e-store very easily and find all the e-stores in one place. That's what we wanted to do with dating sites. Mm-hmm. So everyone would be able to open his dating site very easily. So I started working on it, and then I saw the structure that we did it enabled us to do a lot more things with this structure. It's a groups network that you can monetize every network whatever you want. Like mm-hmm. if you want it to be a dating site, it's a dating site. If you want it to be a channel that you can broadcast your videos to investors and they will pay for that, you can do it as well. You can monetize it whatever you want. So we generalize it to be a content monetization platform. Mm-hmm. And so we started doing so in January. We went public. In April, we did our ICO. We raised in a few hours. Actually, it was 2 days, I think. And now we are working on two main projects. One project is the platform. And then when we started building the platform, we discovered something very interesting. We started building the platform, and we thought about how we can get the users to deposit their crypto, to use the crypto in the system, mm-hmm. without it to interfere the user experience, because Ethereum is quite slow. Mm-hmm. So we built a payment gateway that will enable them to deposit their crypto and to get equivalent database entry points in the system. So what we're doing now is enable that. We want to enable it to all a lot of other apps that want to accept crypto in their app. So what we're doing is a gateway, except the platform. We're doing another project that called Gapi Pay, which will be a App Store / gateway, payment gateway.
Okay. We'll get into all that. That sounds like really interesting, but I just want to take a step back for people, obviously, before we jump in very deep. So you mentioned that you were actually involved in a hedge fund originally, and that's kind of your background. So coming into the space, you mentioned you saw Bitcoin as an asset that wasn't controlled or centralized. The issuance wasn't controlled by anyone. So I think that's the key difference from a lot of other assets available. But then you sound like your fund, your managers were quite open to that as well. Like they didn't say, "Oh, it's just rubbish, it's just a scam" or something. How come you were more open, or your fund was more open to that? Did it take you a while to really realize the potential, or you just straight away started getting involved? From my perspective, I started watching it, for a couple of years before I got involved because I didn't take it seriously at that beginning. So I'm just curious.
Yeah, I believe if you want to learn something, you have to invest it. You have to put money in it, because then you are personally vested.
Then you pay attention to it. Yeah.
Yeah, only if your money is involved, you are really able to learn something. So that's the reason I jumped in fast, and then the other person that took more than a year to do so on their own. But for me, it was like an experiment. I wanted to learn something, so I put my personal money in it. That's why I dived in a lot more deeper than they.
Mm-hmm, mm-hmm. Yeah, I think for me, I stood back and watched it for a while, but I didn't take it very seriously because I didn't have money invested in it. So, I was still looking at other sort of hedges like gold and silver, for example, because I saw there was potential there. But when cryptos came along, I've been looking at the problem for so long in the financial world, and when cryptos came along, to me, it just seemed like the obvious solution. In terms of the trustless factor, the fact, there's not all this debt behind it, and it can't be shut down. So, so it's totally voluntary form of money. And then obviously this year, I think 2017 is when we saw the market going from not just being Bitcoin to, all these other tokens and assets coming into the market, all these kind of new utilities and use case emerging. So things like Matchpool, there's lots of really interesting projects like that out there. So in terms of how you've seen the whole landscape evolve because you were involved with Ethereum right at the beginning, and now you focus just purely on ICOs, through Alphabit. So tell me a bit about how you decided to evaluate that space, in terms of when you're seeing ICOs come out, because there's so many ICOs now. I think there's a lot of hype and FOMO in the market. and people are trying to establish, what's a quality ICO. Tell us a bit about how you look at that space and how you kind of filter out the noise.
Okay, so before I'll tell you what is my parameters to every project that I see, I'll tell you what I think is the big revolution in all those app coins and all the new business model that Ethereum brought to the world. I think that Bitcoin and Ethereum brought different values, but why I think Ethereum and think that Ethereum is because before the blockchain, startup used to fund themselves, and it's also connected to other thing that is the business model in the internet today. The business model in the internet today is that, for example, Facebook, right? You're using it for free. You're using everything for free, but it's not free. It's not free at all. Facebook is worth $500 billion, and you didn't got anything out of it. Not only that, they track all your data all the time. And they sell it to anyone that willing to pay. And here you have a lot better model because first you're holding the token, you're holding the right to use the platform. So if the platform will have a lot of traction, you will be richer too. So I think instead of only Peter Thiel or only small amount of investors get all the jackpot, every user that contributes is getting compensated by the token value. That's why I think it's
huge. Yeah,
it's so unstoppable and amazing and all that. And in terms of specific projects, actually, because I'm so much time in this space, I'm getting the projects. I'm getting only the good projects to look at because I have a friend. Most of the projects are my friends. So if someone is doing an ICO, my friend is telling me about it, and we probably already know these people for more than a year. So for example, the recent big ICOs, we already know about them from their PR company, from a lot of investors that they approach to, and all the deal flow is coming to us before the ICO, so we're able to know and to evaluate the project before they have ICO, and regardless of what there is outside. But I think when someone wants to evaluate the project, you have to look at a few things like valuation of every startup, I think. First is the team. You have to see if they are able to execute what they're aiming to execute, what they have now in terms of software, in terms of how it's integrated with Ethereum, what they have built. And the community, the size of the community, the traction that they are getting, that can be measured in the sizes and the traction of the groups. You can go to Telegram, you can go to Slack, you can go to Reddit, and you see how people evaluate them, what they are thinking, how much people think, if they're active or not. All those people can tell you what will be the result, more or less. And also token economics. If they are selling a small amount for big amount of money, so they are evaluating the project with too big initial market cap. Yep. So if a project is raising $50 million, his initial value is $50 million. So
is that too high for you, or does that just depend on the project as to what's a reasonable market cap?
Normally, it's a tricky question. Normally, it's too high. It's too high for every project in the world. Elon Musk did SpaceX and Tesla together in $70 million. And This is two of the biggest companies in the world, and the most ambitious, not the biggest, but the most ambitious companies in the world, and they're already selling real product and do real stuff. So you don't need more than that to build a software product. This is that is also a parameter. How much money is he raising? how much, what going to be the token usage, if he's keeping to himself, if he's locking the tokens.
Yep.
Because if he's locking the tokens, you have a line interest with him. If, for example, Matchpool token is locked for 1 year.
That's
so
good to know.
Yeah, so we have 8% that all the team together that is locked for 1 year. So we don't have any way to sell it because it's not released to us by the smart contract. So so we are all in the project and we all have the same interest to bring the project into good results. That's it, I think. That's
Okay.
the main parameters.
That's very interesting. So I look at, I guess, very similar things. I think the token economics is a really important point you mentioned. So how they're valuing themselves and obviously how much funds they're raising, because you're seeing a lot of these ICOs now raising $50, $100 million. I saw one the other day for $200 million. So obviously there's a lot of hype. And obviously people are trying to jump in, not knowing what they're getting into. I think a lot of new money is coming to the space. So it's just creating this kind of real, panic and FOMO where people are just dying to get in. There was a few ICOs yesterday, actually, that I was looking at. One was Salt. And actually, I like the concept of Salt because, they're basically collateralizing blockchain assets, creating loans and credit against that. So it's actually adding liquidity to the market. And that's something that's really useful long term. What I didn't like about Salt is they had already raised about $40 million in pre-sales. And so when they're going to ICO, potentially there's going to be a $100 million company. Yeah, okay, they've got some cool software, but there's so much premium built into that, and there's so much value dilution if you're contributing, because you have a portion of that $100 million. I think those kind of valuations are a little bit crazy, but it's such a speculative market, so we don't know. It's just like during the .com boom, we don't know. It could go another 10x, 100x from here, where it turns around. So it's very hard to separate sometimes that. I think the total market cap is really important. That's a number I look at. I think I personally prefer anything between $5 to $20 million. If it's over $20 million, it starts to become very speculative. And then I have to really be confident in the project to still want to invest in it. So I have to be really sure, they have a strong, like you said, a strong team. The MVP, the platform of the software is really good. It's actually going to come to life soon. So a lot of these white papers and concepts are just ideas, right? And they're maybe years off actually realizing any value. So that becomes more and more important the more money they're trying to raise, basically. And you had like Tezos come in, they did a huge ICO, but they didn't lock any tokens up. So they're just really trying to, in my opinion, just trying to cash out from this market, craze, and obviously, take the money and who knows what's going to come. So yeah, those are definitely some red flags. If you don't see the tokens being locked up by the founders, you see huge amounts of market cap. You're going to basically be taking a very small chunk of that if you're an investor. So I like the ones actually that are flying below the radar. Sometimes, you don't see a lot of engagement with the community, and especially if it's very early stage, like pre-ICO, just no one knows about it. But if you understand the concept, especially in your case, you said you know the people, so there's that trust factor, right? So if they have proven execution ability, you think they know what they're doing, obviously that gives you a bit more confidence to invest in them in an earlier stage. And I think what's really interesting is the sort of ICO life cycle. So maybe we can talk about that for a minute. The way kind of I look at it, there's different levels of risk and return at each stage of that sort of ICO. So you have the sort of very beginning or pre-ICO, where there's like a discount on what the public ICO rate is going to be. You're locking your tokens up for a bit longer because it's going to take you longer to actually get them released on the market so you can trade them, but potentially a lot more upside as well. And then you have the ICO, which, again, is a discounted period. You're buying it early. The company doesn't necessarily have a product or a real business model yet, but you're getting it early for some extra potential returns. And then after that, once it goes in the exchanges, like Ether Delta is a decentralized exchange, or it goes on to one of the big ones, you see all the volume come in. People that missed out on the ICO are chasing it. So then again, it's a very difficult time to get in, because by that time you kind of missed the boat. If you're not careful, you can really be buying it at the highs, chasing the highs. So I think from the ICO lifecycle perspective, I think pre-ICO is best if you can be very selective and the projects you're getting into. And then obviously during the ICO, if you miss the pre-ICO or whatever, then the ICO is a good time to get in. But a lot of the people are just kind of caught up in the FOMO, like ICOs selling out in hours, and so they feel like they have to rush in. And I feel like that's not always the smartest thing to do, because you'll see it come out on Ether Delta and then the price will crash. And so you can always come in after the ICO and you can always pick up a bargain if you still like the project long term. Do you have any thoughts on how you play that in terms of, are you always going in pre-ICO with 90% of what you invest in because that's how your network works, or are you also looking at sort of after that stage?
Yeah. So you asked two questions. What are the life cycle and like what is this? I'm not sure that you asked that, but what are the different strategies for investing in which stage? So like everything in life, it's a game of risk and reward. But as long as like the biggest parameter for me is the team. If I know and trust the team and I trust the team because they are executing and they already execute, so that's why I trust them. I'm trying to get in when the risk is the highest and also the return is the highest.
Yep.
Before they or when they before they are publishing the public post, different people give different discounts. And it's also, you have another risk here that they will not be able to accomplish successfully the ICO. So,
right.
So for example, if you are giving someone some money and then you give a discount, but it will not make the ICO successful. So even, you know what, it depends also, because in part of the times that's even better because the amount he's raising is lower. And then he can he's starting from a better point of view in terms of the one who invest. So that depends, but I believe as long as the project go forward, the risk is lower, especially after the ICO. But there is a lot of events that happens, a lot of cases that someone is raising a lot of money, and then in the secondary market, the price of the token is going below the crowd sale price, and then it's better to buy then. But
so when you say secondary market, are you talking about HIT BTC, or is there another market where you can actually trade these tokens before they're released, or are you talking about Ether Delta?
No, I mean the secondary market. I mean after the token is being released, like in the exchanges.
Okay.
In every exchange. But I'm not going to a project that raise too much. So most probably they will not go below if they raise the 5, 4, 3, 3. By the way, project that raised 3, you don't need more than 3 if you think about it. This is a startup. You don't have any need to raise more than $3 million. If you think about the regular startup that raised 3 is insane. But if startup, if ICO raises 3, it's considered to be very small amount, but it's not very small. It's reasonable.
Okay,
yeah.
so you would agree with that kind of $5 to $20 million range as in terms of projects that are not too overhyped, or do you say anything over 20 million, 30 million, even lesser?
Even close to 5, because you don't need more than that.
Wow. So we saw an ICO yesterday called 0x, and it's kind of a protocol layer
I know, exchange.
So their cap. What I liked about it was they actually set a hard cap to say, we're only raising 24 million, whereas some companies they don't even put a cap, so they're just raising as much money as they can get. With 0x, they're saying we're only raising 24 million. We're capping individual contributions to a certain amount per address, and so people can't come in and buy up the whole market. And I feel like that's like a genuine attempt to decentralize the distribution, prevent these whales coming in and then potentially dumping, to get out later. And you had to pre-register. So yeah. So I really like that kind of model, but that's quite rare in the market to see that. So sometimes you don't have that privilege. And I think in your case, you're lucky you do get the deal flow come to you early. So you're not like the general public, which is just going on the ICO websites looking to try and find good projects. And I think once you get to that public level, you need even more discernment and awareness, because you can't rely on the trust. All these projects are strangers to you. You don't know these guys personally. So you really need to have some solid metrics. There's a guy also called Ian Molina. I'm not sure if you follow him. He's got a really useful ICO spreadsheet. So he's got a sort of set of metrics that he follows. I'm going to try and get him on the show as well. But basically, like you said, breaking down how strong is the team, how strong is the MVP, what sort of target market or sector they're operating in, and then in terms of what their ideas, how good their ideas. He kind of actually puts those all into metrics, and then scores the project to say, these are my favorite because of X, Y, Z. Do you have anything like that sort of more methodical, or it's just pretty much you're comfortable with your network and therefore you use that as a sort of primary filter, and then you look, you look through those?
Yeah, I have a checklist, but it's like more intuitive because I'm doing it a lot. So I'm just asking a bunch of questions, regular questions that I'm asking every project, and I'm getting a score in my head based on the answers, and decided what. Also, for how much time the money is locked is also a very big parameter. So if
what's the most you would lock it up for?
It depends. For example,
it's a huge opportunity cost, isn't it? There's so many ICOs coming out. You're getting your tokens locked up for.
But that's depend. That's really depend, because in a big project, like for example, there is project in Israel. They're called Zen. They developed. I don't know if you read about them. Zen protocol.com, I think. So they already developed the blockchain and developed a new built from scratch smart contract platform only for financial instruments. Which means options, futures, all those kind of things, and it's fully decentralized, already working. So with them, I'm locking the money for 2 years, for example.
Wow.
With Polkadot, not every investors have to lock the money for that period. I want to do it because I lost with Ethereum. With Ethereum, I had 150,000 Ethereum. If I would block it, it would be $30 million. Instead, I just made $20,000.
So it's for your own good as well. Yeah.
I want to learn. And there is another, for example, Polkadot, the new visionary project by Gavin Wood. I'm also want to lock it for a long period of time. But if it's a dApp, it depends which layer it's function on the ecosystem. If its function as a dApp on Ethereum, it has a certain potential. If it's function as a new blockchain that profitabilities and new base layer of like Filecoin, storage, Ethereum, Quantum, Neo, Waves, all those base layer that have much bigger potential than that on one of those.
So you also invest in those as well, like the infrastructure layer coins, I call them, like you mentioned, Ethereum and Neo.
Yeah, of course, but not necessarily, because also the dApps, if it have enough users, that can be itself bigger than, for example, if eBay will do an internal token, this token will be worth more than all the market cap together. Not all the market cap together, Ethereum market cap, let's say. So it depends.
No, that's really interesting. I think that the growth is all leveraged on top of those infrastructure layers. So you've seen that's why Ethereum's done so well, because all the new layers coming out, all the coins are programming into the Ethereum blockchain. So that's where the value, the demand comes from. But you also see a lot of volatility because you have companies raising funds, with Ethereum, and then they need to cash that out to fund their real world operations. So you have these sort of crazy spikes in Ethereum, and then the companies all sell off, like Tezos or whatever, they're selling in the Ethereum for cash, the dumping lots of supply in the market. So I think you have huge volatility in Ethereum, and actually the latest sort of rise I'm seeing in the market is very interesting, because Ethereum is not really, I would say it's underperforming the market right now. It's only around $300, whereas the market is generally at all-time highs. Bitcoin's at $4,300, but Ethereum hasn't even taken out its previous highs. So I think we're seeing some rotation into some of the newer infrastructure coins like Neo, like Quantum, like Waves, and they all have similar potential. But obviously Ethereum is kind of the most tried and tested at the moment. But I think especially with Neo, it's very interesting because it's definitely developed for the Asian market, the Chinese market. And I've been saying to my group that fundamentally all these blockchain assets are just valuing the economic growth behind them. So if you look where the economic growth is going to be moving forward, obviously Asia is going to probably be number one. And then a coin like Neo can do really, really well, because actually all those projects being tokenized in the future will probably go on Neo's blockchain, not Ethereum's from China's perspective. So do you have any views on that, like how real economic trends drive growth, or is that not an area you focus on too much?
Yeah, of course. That's coming back to the token economics.
Yep.
You have to see if the token economics is really giving the token value when there is usage. If the token is not related to the usage and it's not an intrinsic usage of the token while there is usage in the platform, then the token is not the source of the symbol of value of the ecosystem. The token is supposed to represent chunk of the protocol, chunk of the network, and you have to see if the token really represents it.
So can you give us an example of a couple of projects you really like, and then ones you don't like, and just to make that difference really clear to people?
Yeah. So for example, my friends Wings.ai, okay, or Ogre, for example. So Wings, in the token is being paid for a broadcast. If you want, so in Wings you are able to go and to bet on a future success of a project. In the future there will be much more features, but right now you can forecast how much money a project is going to raise. So you're locking your wings, and depend on how much wings do you have and how much accurate you were, you're compensated from the project. You can lose. It's the bet where you can lose. You just lock your token and get compensated. In Matchpool, for example, you can't use the platform, whether it's to pay for an entrance fee, to pay subscription fee, and also to open a pool later on. So you can't use the platform as a pool maker or as a user without paying with guppies. In Ogre, for example, although it doesn't exist yet, but when it will exist, you are your ability to predict. You are reporting the result of a past event, and you're getting compensated by how many tokens you have. So if you are, if you tell the system that Donald Trump, not Hillary Clinton, won, and you have 10,000 tokens, not 100 tokens, you are getting compensated by the losing side. So that's intrinsic. What's not intrinsic, I don't know. I know, but I don't want to say bad words about anyone.
Sure. No, that's fine. Yeah, so I think obviously the value of the token inside the network is really important. What I look at, which is really, I think, my edge, I come from a finance background, especially economics, and so I'm actually focusing on coins and tokens that return a yield and actually have a dividend, because for me that has a couple of benefits. If the coin appreciates in value, then I don't have to sell it to see a return, because I'm actually getting interest and a yield from it. And there's a few different projects like that coming out now. Some of them rely on sort of fiat business models. So you have tokens like Populus, for example, which are doing invoice factoring. So they'll get a chunk as a token holder of Populus. You get a chunk of every invoice that they can sell or they can transact in the market. And invoice factoring is it's a huge cash flow for banks. So it's like potentially a massive revenue stream. But it's going to take time for them to launch their platform, to get businesses on board. And so that yield is not going to be very immediate. It could take a few months. And obviously, even if they have a good platform, it could take months just to grow the membership, the network effect. And then you have other tokens like Rialto, which I really like, because their model for getting yield and dividend is not dependent on the fiat world. So they are basically just like an arbitrage and market maker, and providing liquidity between these silos of liquidity that we have right now with the exchanges. So the reason we have all these kind of premiums and problems with the market with liquidity is because of these silos essentially. And what Rialto are doing is kind of providing that liquidity, but they're making money purely in the crypto world. There's no dependency on fiat, so they can start making money from day one if their product's good, if their platform's good. So I look at projects like that that are delivering a yield, because you don't have to sell. Obviously, when you sell, potentially, you have to figure out what to do with that money. That, like you said, you could sell too early because you're trying to cash out, and so you miss the big moves, right? So I think that's kind of my focus. Are you seeing any interesting developments like that in the space that have changed recently, or the way you look at it is going to change in the future?
So if you're investing in something and you're getting yield from what the project is doing without doing anything, that's a security, and that's if they are not regulated as security, that is illegal. And so I don't know how. So either this project have to be registered as a security and be legal, or it's doing something illegal. But there are projects that enable you make money without losing the tokens, if that's your meaning. For
so
example,
give me an example, yeah.
Okay, I'll give you two examples, the same example that I gave you before. With Wings, every time you're going and do like a prediction, you are getting compensated from the project's token. So you can earn other project token without doing anything, without losing your wings. So for example, you have 10,000 wings. You are logging these wings. You are making a prediction, and you are winning other projects tokens that he put aside. In Matchpool, you can open a group like you're doing anyway in YouTube and other places, and get a subscription fee from people. In YouTube, you can do it. Also in Slack, you can do it. Also in Facebook, you can do it. So, here you are able to earn more guppies without putting your guppies at risk. Or even if you don't have any guppies, you can earn guppies from other users that are paying you. That's what comes to my mind.
Yeah, so I like those models because you don't have to sell the token, and it incentivizes people to hold it, right? Because if you're going to earn a yield, then it incentivizes people not to just sell it for capital gains. So for example, with Bitcoin, when Bitcoin goes up, you're not making anything from that unless you sell it, because it's not giving you a yield. And so potentially, the miners that are mining Bitcoin, they basically have to sell at some point because they have to fund their operations, they have to pay their labor, their hardware costs, all those electricity costs. So it basically adds supply onto the market. If you look at a token just from purely supply and demand, fundamentals, if you have more supply, then that's going to suppress the price. Whereas if people are incentivized to hold it for the yield and they're not selling it, that restricts supply on the market. And then if demand is also growing at the same time, they're adding users, they're adding features, they're adding value to the network, to the coin, then that demand is increasing, the supply is less. That's the kind of very favorable economics I'm looking at in terms of capital appreciation, because obviously the coin will do very well in that environment. So I'm really looking at that from that perspective as well, that the coin should grow faster in value than a coin that it has no yield, because then investors are forced to sell it at some point to get that kind of get that return. Does that make sense? I guess it's pretty common sense.
Yeah. Although it's not really accurate, because Bitcoin recently had a fork, and you got some type of yield, Bitcoin Cash. So you got, and also Ethereum had a fork. So if you used to hold Ethereum and you touch it, so now you have Ethereum and Ethereum Classic. If you hold Bitcoin, you have Bitcoin Cash, and you also have another Bitcoin in November. Sorry. So fork is another way to
right. But you can't bank on a fork, because you can't always see it coming. It can add a lot of uncertainty to the market, and you don't know which one is necessarily going to have long-term value.
Of course, yeah, of course. It's not predictable. Yeah, I agree.
So that is a good point. I think that the tokens I like at the moment, like I said, are purely getting returns from the crypto world, so like Rialto. And I think you mentioned that part about securities, that it has to be regulated or whatever. So it's interesting how tokens are now branding, or in the white paper, how they're calling it as it's not a security. You're just getting a right to your percentage of the revenue. You have no right to ownership in the company. So essentially, like a stock, when you buy a stock, you're essentially buying ownership of a company, and that's why it's returning a yield based on that company's profits, right? So you're getting a percentage of that profit, and that's why it's a security, because you actually have ownership of the company. What they're saying with some of the tokens is that you don't own anything in the company, you have no rights to the company, you are just getting a return of the yields from our revenue stream. And so I'll give you an example again. Another one is it's a really interesting project called Farad, and what they're doing is they are using an ICO to fund their production of a factory, and that factory is going to basically build these ultra capacitors. It's like it's a component in batteries and energy storage. And so their whole ICO, the funds are going to build this factory, but you don't own the company. You're only getting a percentage of return based on the production of that factory. So all the ultra capacitors that get produced are linked to the token's value. And then obviously as they're sold into the market, into electronic manufacturers and battery manufacturers, you getting some of that yield, some of that return. So it's a very gray area, because it's just so new. The whole space is so new. But I think ultimately that's really what we're going to see in the future in terms of the blockchain. And I see that all these assets are going to be tokenized because there's just no liquidity in the capital markets right now. So, if you look at, like you mentioned, stocks, bonds, property, obviously you worked in a hedge fund, so you're very familiar with this space. The whole problem is that there's just not enough liquidity right now because the euro dollar is not, the system's not really working. And so the banks are stepping in and printing a bunch, doing a bunch of QE to try and keep liquidity going. But that whole system is kind of failing. And that's why I think we're seeing so much growth in cryptos. And so a model like what Farad are doing is essentially able to unlock a bunch of, liquidity and obviously capital investment in a way that, it doesn't look like it's regulated at the moment, but in a way that rewards the token holders. And like you said, it's very decentralized. So I really like that model. I like projects that are backed by real economic value. I think that's something that's very new in this space. A lot of the stuff is very speculative, just like the tech sector. Amazon, what could be the next Amazon, the next eBay? That's kind of where people are investing from. But I think projects like Farad is going to be the next sort of wave of capital, where you have a bunch of companies that need to raise funds for operations, and they're just going to end up using ICOs because going the traditional route is just really tough. Obviously, with IPOs, for example, in the stock market, you need a lot of money. You have these middlemen, all these advisors taking big cuts, big fees. How do you see that kind of trend changing with this kind of the financial system, the financial services industry, especially being cut out of the picture with blockchains? Do you think how does that affect the world in general?
What shift are you talking about? The shift from equity to tokens?
So from companies doing IPOs to ICOs instead, and not going through the financial system and all the financial middlemen.
So that's what I said before. Companies doing IPO in the end of the day is companies that sells private equity to investors. The exchange is just a place they are doing it. And these shares supposed to have profits and get the profits out of the internet venture into the company, which is not natural act to get money out of. So, like you see, most of the internet companies are not have profits because maybe they're not supposed to have profits.
Right.
Maybe there are just ecosystems that have value coming from a person who creates the value, a person who consumes the value. So I think the tokens is a way to represent the value that is created within the network, and the fact that it's being traded from the first day, it's very easy to represent this value. So not only the big investors are getting, and also most of the VCs in the world are losing money. Why they are losing money? Not because of they're doing a bad job, because the model is breaking. The model of trying to take profits out of a legal entity into a legal entity from a internet venture is flawed. And the right way to do it is to represent the value that is created within the network with everyone, with the right to use. So the right to use is the shares, is the only way to use, is the representation of the value, is everything. And so I think that way will become more and more popular. And I don't know what will be in the end, but I think most of the companies in the world and most of the money in the world that used to be invested in equity will go to tokens, but the way it's organized will be changed. Like now it's premature. It will have a small crash, maybe in a year, maybe two, I don't know. And afterwards, it will be a lot more mature growth, more mature ICOs, more regulation, which is a good thing. And yeah, that's it.
So yeah, I think Goldman Sachs just released a report showing basically the amount of funding happening through ICOs has just exploded this year, and it's actually way more now than VC funding and traditional funding. So that definitely is a sort of next wave of capital and growth. Are you seeing institutional money and big money kind of getting more interested in the space, and how do you think that affects how the space is going to grow? Like you said, it's going to mature eventually, but it's going to be a bumpy ride. So walk us through what you see happening in the next 2-3 years, and what are the best opportunities? What are the risks people need to look out for?
I have no idea what will happen because I don't know the future, but I can just assume what I think, just to think about.
Sure.
First, I think right now there is in the institutions. They put their money into ICOs. Even Sequoia Capital have a fund, and a lot of hedge funds, a lot of governments are interested. with that, I think it's not natural that companies are raising that amount, and so more and more tokens will go into the ecosystem. But I think the amounts of the new tokens will be bigger than the amounts of money that is going into the ecosystem, and the ecosystem will not be able to support in all the projects, and only the projects that have real internal intrinsic value will stay in the end. Only the people that will deliver. And I think most of the tokens, or 50% of the tokens, will be zero in close to zero, maybe close to their cash in a few years. Let's say 2 years. And after people are losing money, that's where regulation comes in.
Yeah.
Because regulation don't want to protect the investors, so they will put a lot more hurdles, but good hurdles for people to raise money, like they did with the stocks in the 1920s, and then everyone that want to do an ICO will have to have a product, will have to disclose a lot more details, and then there will be increase in level of projects, and more smart money will come in. So I think there will be a bust and then growth. But for the long term, for sure, this gonna stay and take over the old models.
Yeah. So I think I see a similar thing, but I think the regulation is interesting because it's very hard for the regulators even to keep up with the progress, right? The space is moving so quickly, like the regulators always seem to be one step behind. So I think you can't rely on regulation to save you. You're going to have to be a bit more savvy with how you're investing if you want to take advantage of the growth. Like you say, the ones with intrinsic value are going to go to zero eventually, and I think that probably more than 50% of the ICOs, the coins out there right now, are probably junk, and they're caught up in the whole bubble. So when the market's rising, you can't see what's rubbish, and when the market washes out, then you start to realize, oh, this project has no value. So I think people need to be very selective with the industries with the sectors they're going into. I think the ones I focus on, like I mentioned, is in the finance space, because the ones that are adding liquidity to the whole system, I think that is underlying all the growth in the space. So there's some sectors like that which I feel will outperform because they are behind the growth at the very bottom layer, if you like, of that the whole wave of capital coming in. So coins like Rialto adding liquidity. When you say that there's going to be growing pains, right? So bunch of capital coming in, the current systems and like the exchanges are just overwhelmed. They can't handle that volume, so they often go down. People are accounts get hacked, things get lost. So there's just that whole problem with the growth. It's going to happen so fast that I think that the liquidity layers are the ones that are going to make it more mature as a space. And so you say the space is going to mature eventually. I think a big part of that is how much liquidity there is, and trust there is. And so those are the sort of projects I'm looking at. Is there anything like that where you think there's a certain sector or certain companies that really solve a big problem and are going to really do really well out of this in terms of trying to be more selective in your investments? Anything exciting you see?
Right now, we're doing interesting things.
Yeah, like as a sector or as an area, like in a particular industry, because I think it's good to kind of niche down to be good at one particular sector or industry that you understand. Otherwise, you're just investing all these ICOs and you don't know which ones are going to do well.
It's not about sector. It's about you have to look on those things from 10,000 feet to see where they are fitting in the industry, and then go more narrow. By the way, I have a call in 5 minutes, so
sure. We can wrap it up. Yeah.
Okay, but in general, I think what's interesting is the thing that are trying to build the infrastructure, new blockchain. They're trying to build things that other things can be built on, but also very interesting to see new sectors as dApps that are built on new sectors. But every case is different. You have to evaluate every case separately.
Okay, so we'll wrap it up here with this question, if you don't mind. If you had to pick 2 or 3 projects right now that are really exciting that you see have potential, what would they be and why? And you can say Matchpool, I don't mind.
Matchpool. And I'm not biased. So I would say Matchpool the third.
Okay.
So Zen protocol, I think, is interesting because it's an infrastructure layer and it's for financial assets, what blockchain is supposed to be for. Polkadot is very interesting because it's supposed to connect all the blockchains together. Filecoin was interesting. It's already over.
What was that last one? Sorry, you said it's already over?
Filecoin is I'm not talking about if it's priced or not priced. I'm talking about only if the project is interesting.
Yep.
And we're trying to do big things at Matchpool, but I'm not recommending anyone to do anything. Everyone is doing his own stuff, and yeah, that's it. In general.
Okay, very cool. So we didn't have enough time to cover everything I wanted to. Maybe you can come back on the show again when we have more time. I'd love to, go pick up the space in maybe 2-3 months, see where we're at, because I think things are moving so quickly, and get your insights on that. But I appreciate, your recommendations. We'll definitely put some links there. Our investors and users can check those out. And maybe next time we can go a bit deeper into Matchpool and what that's about. Obviously by then, that we'll have some updates as well, some growth in the space. So we'd love to chat again. And thank you so much for your time.
So we'll stay in touch. Thank you very much. Bye.
Okay, take care. Bye-bye.